Welcome back to GrowthTV. I'm Carolyn Vallejo here with Bob Dunn, who is Managing Director at GF Data. Now, GF Data has been around since 2006, but recently you've expanded the deal sizes that you cover. Can you talk a little bit about why?
Yeah, definitely. So with the acquisition by ACG, which was about a year ago, we wanted to make sure that we were in full step with the real middle market. When Andy and Graham first set up the company, 10 to 250 million in enterprise value was kind of the sweet spot there, and was definitely part of the kind of non-Wall Street sort of transaction area. But obviously with time, everything evolves, and we think now anything in the sub-billion, but specifically 10 million to 500 million is really kind of squarely within the niche that ACG's members are in as well.
Right. So is there anything that you're seeing on, kind of the larger end that stands in contrast to the lower end?
Yeah, the big one, and we talked before, the big story is really cost of capital on it, and I think getting financing for larger transactions now is extraordinarily difficult to do. Banks are skittish. We're seeing good activity with non-bank lending going on, but again, that traditionally the senior debt side has been bank lending, and there's been a big pullback on that. Right. So the tougher to get these deals done, though we are seeing higher multiples when they do get done, and the strategy behind it seems to be let's put more equity in them and avoid the higher cost debt at this point. So we saw average equity in the 100 million to 250 million, or sorry, 100 million to 500 million go up to 63%, which is the historic high. We haven't seen that before. So it seems like rather than pay that high cost of debt, they'd rather over-equitize.
Mm-hmm, absolutely. Now, it's impossible to predict the future, of course, but everybody wants to know what's ahead. So are there any data points that you're seeing that could be some leading indicators?
Well, I mean, I think when you look at Q1, a lot of it was what didn't happen in the fourth quarter. So we saw some, higher price transactions that get done. We also saw a lot of them that while we don't ask whether a deal is broken, it clearly seems that some of these were broken and that the price was renegotiated on it. So I think looking into the second quarter, you should have more of a normal environment. We hear about more activity with companies being prepped to go to market. Founders who are interested still in potentially doing some succession planning, even though it may not be the market that it was 2 years ago or a year and a half ago, but that those sorts of sales aren't really being impacted by the current climate. So if you can find the capital to get the deal done, refinance at a future date, I think that speaks pretty positively to the future.
Yeah, absolutely. Okay, so bright skies ahead. Thank you so much for sharing your insight.
Thanks.